What's up everyone, it's Karthik with MoneyVest. Welcome on board for our Market Open live stream for inflation numbers that are also scheduled for today. They have already come out, by the way. So we got the PPI numbers, the producer price index numbers came out earlier today. So month over month coming in at 0.5% versus the consensus at 0.3%. Year over year PPI, so producer price index coming in at 2.9%, so a little bit higher than where the expectations were at 2.8%. However, lower than where the prior number was at 3%, down to 2.9%. Ex food and energy, so when you're looking at core PPI, so core producer price index excluding for food and energy here, 0.7%. And the biggest blow to the market is, of course, core PPI on a year over year basis coming in at 4.2%, which is much higher than the prior numbers at 3.7% here. So pre-market, we are seeing QQQs down further, so over 80 basis points worth of sell-off in pre-market, with the S&P 500 down over 78, almost 80 basis points. Looks like February is going to indeed be a red month for the market, as Nvidia is also dropping over 1.4%. We got Tesla down over 1% right now, as volatility is back over 21, a little bit over 13.5%. So lots of movement happening. Once again, we're seeing a risk-off environment in this market. That's pretty much been the trend so far in 2026. We have seen the markets rotate out of technology, of growth, of software, AI companies over to other parts of the market. And there's been a lot of volatility, a lot of confusion, and a lot of consolidation as well. So that's exactly what we're witnessing at the moment. Netflix, on the other hand, is pushing up over 8% pre-market. So very nice move to the upside. Netflix can take advantage of the pressure. Paramount Warner regulatory risk could give Netflix an opportunity. So the Paramount Warner deal carries significant regulatory risk, and it doesn't pass. Netflix could potentially acquire Warner Studios and HBO Max for a lower price. It says KeyBank analyst, and the Paramount deal will face scrutiny about the companies operating in the blockbuster movie market. Potential job losses in the U.S. film industry and financing coming from outside the U.S. Even if the deal is completed, it would create a bigger competitor to Netflix, but it is unclear to us how aggressively this new entity can compete given debt and tech stack differences. So Netflix is on the move here. I picked it up, Netflix, in the mid to low 80s. It's now trading up to over $92 per share. I've been talking about this stock for quite some time, as it's been trading at a pretty good value when it was in the low to mid 70s. So hope y'all are doing great. Welcome on board for the live stream. Thank you so much for joining. If the audio and the video is good, just give me a thumbs up and we should be all good to go here. Good morning, all amazing folks here watching from oil field, frac location in Louisiana. That's incredible, Chente. That's amazing. Morning, good afternoon, or good night, wherever you are joining us from. Yes, PPI numbers are out. They came in much higher than where the expectations were, especially on the core PPI front, came in at 4.2% versus the expectations, versus the prior numbers at 3.7%. So 50 basis points higher than where the prior numbers were. So definitely a much bigger jump here. Pump the VIX, pump it up. Let's get a proper market correction going. RB says, good morning, MoneyVest Army. Great meme in the Discord. The market doesn't believe in love. Let's petition to move Valentine's Day to another month. I agree. I think it's been not the best month when it comes to love, but market love. Of course, markets are not getting any love as they continue to sell off further, especially technology, software, and AI companies selling off more aggressively than the Dow Jones. I mean, the Dow Jones is indeed green for the month here. So in the month of February, the Dow is up over 1.2%. And on the contrary, the NASDAQ is down over 2.4%. So that divergence alone speaks to how this market has been this past month and also so far in 2026. So this is the NASDAQ's chart relative to the Dow Jones. I mean, we've seen 4 straight months of underperformance of technology and NASDAQ relative to Dow. And the last time we saw this level of underperformance was back in January of 2025. So right during the tariff tantrum of last year, so March, April of 2025, 3 straight months of NASDAQ's underperformance relative to the Dow. And then prior to that, we saw that back in 2022's bear market, where the NASDAQ was severely hurt. And there was a lot of selling pressure in the tech sector relative to the Dow Jones here. Okay, watching from a train in Vienna. Really, that's you guys are joining in from all the crazy places at all the crazy times. But yeah, let me know in the comments where you guys are joining from. I would definitely love to learn more. People joining from oil fields to a moving train. What else are you guys doing? What else are you guys actually up to? If the connection's so damn good, I'm glad. I'm very, very glad. But good night from Australia. So yes, Peter, I think it's going to be pretty late over in Australia. I know when I was there, the markets opened around midnight and they trade overnight. It's very, very difficult to keep track of US markets, especially if you are in Australia. Louisiana would be another great place for the MoneyVest annual meetup. That's good to know. The food there is phenomenal. I'll keep that in mind for sure. Representing middle of the map, Kansas. That's amazing. That's great. Just from my desk, that's also amazing. Getting closer to your preferred valuations. Yes, absolutely. I think the markets are, of course, selling off, or they have been consolidating sideways. So really what we are witnessing is a lot of range-bound patterns for the market as they are bouncing around in between that range and they continue to consolidate sideways. And so S&P 500, as we already know, on a daily time frame, continues to move in this range as it's not able to really figure out direction. And there's a lot of indecision with regards to where the markets really want to go, because one day we've got some good news, the second day we've got some bad news, good news, bad news, and the markets continue to kind of flirt sideways. It's really just a kangaroo market that we're dealing with at the moment. From Southwest Germany, that's amazing. From my jacuzzi in Tulum. Wow, that's incredible. Alberta, Canada, Bombay. We got driving through Spain, heading to the Alps. That's amazing. Ever been to Vienna? I have not. Definitely want to go eventually. And we got people joining from Philadelphia. That's incredible. Let's see. Question on covered calls. I have Nvidia expiring today at 190 and 195. Dodged a bullet. Did my homework on the fund and tech. What margin of standard deviation do you use? Trying to improve my arsenal of info. So when it comes to just the overall selling covered calls, right? So we look at Greeks first. So we look at delta as a very important measure. And then when it comes to understanding volatility, I like to use the ATR, which is the average trading range, which basically tells us the daily, the weekly, and the monthly range within which a stock is expected to trade. And then, of course, going outside of that range and picking a delta that's less than 20 to kind of really understand where my strikes need to be, and combining it with the analysis that, okay, this is the price that I'm comfortable selling at my shares if it comes down to it. So since you do have the 190, 195 call strikes, yes, you dodged a bullet. Nvidia dropped over 5.5%. So you must have seen significant amount of profitability yesterday as Nvidia was tanking as the option moved away from the money, right? So we're getting further out of the money. And so if you are up over 85, 90%, 95%, I would close that option out. And then, of course, decide to open a new one as we are seeing some more momentum to the upside. My Netflix cover call will be severely underwater today. $84 cover call expiring today. Yes, that is most likely going to go away. I've got the $85 call that is going to expire in March. So I think in the second week of March. And so the plan, I will decide if I want to keep it or roll it. I will see what I need to do as we lead into, the expiration. But of course, right now, it's going to be $6 or $7 in the money right now. So we'll decide once it's closer to expiration. Starting the wheel strategy with Oklo and SMR. That's great. From your love place, Chicago. I really do like Chicago for sure. I've only visited Chicago like twice. The second time, of course, my flight was out of Chicago, and I definitely do remember it. Man United back from the dead. It really is. I haven't been following as much, honestly. Like I can't even remember the last time I saw a full game because I've just been out of touch with football, like soccer in general, or any sport for that matter. But yes, I've been keeping track of what they're doing and how they're doing, and I know they're back in the top 4. So that's very, very good to see. That's incredible. So tell us more about SoFi. All right, let's take a quick look here and what SoFi is doing. It's bouncing off, but of course, pre-market down over 4%, back in the 18s at the moment. Resistance is going to be all the way. It's going to be trading all the way up to as much as $20 to $20.50. And we've got a support that's going to stay put all the way down to $17.30 to as much as where we are trading right now, around $18.30. So that $1 range is going to be that area of support, that area of demand for SoFi, because that's also been historically an area of resistance for the stock. So that really is going to be that area of support to watch for SoFi. So that's where we are. Long term, I still like SoFi very much. But of course, right now it's hurting. as most tech stocks, fintech stocks, and software overall, tech companies are struggling at the moment. And so long term, I think it still does represent pretty significant value given the amount of sellout that we're seeing for this stock. From a Leeds United supporter with love, that's great. That's amazing. Crazy premature or pre-market moves here. I'm buying more SoFi today. That's great. And yes, pre-market, we are seeing a pretty substantial drop again. And so after today, given where we are right now, QQQs are going to officially be down a little bit over 5%. So we're back in a pullback. A dip is 5%, less than 5%. Pullback is 5 to 10%. Correction is going to be more than 10%. And then, of course, a bear market is more than 20%. We did briefly come down to a 7% sell-off up until a few days ago in the middle of February. And right now, we're going to be down over 5%. So we're back in a pullback for the NASDAQ 100 as this market continues to be very, very indecisive on where it actually wants to go. The S&P is down over 1.6%. From all-time highs. So again, nothing crazy, but it feels crazy given that the portfolios are very much focused and geared towards technology and growth stocks here. So as a result, when tech is selling off, we feel the pain more than the aggregate markets because of the entire sell-off in that particular sector. So coming over to market snapshot again, you can clearly see where the pain really is. Google was down, Amazon, Tesla. Healthcare also pulled back. We got consumer defensive selling off. And then, of course, the entire technology space, semiconductors, we're seeing the brunt of the pain here. And most companies are down more than 11% here. All of them are in a correction except for Apple, which is down about 5.4%. Everything else is down more than that. And Apple also, because it's seen as a proxy for safe haven, it's seen as a little bit of a safer stock, kind of like a replacement for cash, as investors want to sidestep all this volatility and uncertainty and want to really park cash in Apple, in bonds, in staples, in defensives, in real estate. And as a result, we're going to see this rotation back into technology at some point in the future, as we keep seeing periodically happen every so often. So yeah, that's a strategy. And as I said, I think it's better for the markets to kind of be in this limbo. And again, better yet, if you continue to see some sell-off and some more pullbacks and corrections, because that's going to give us the opportunity and the time, both for us to dollar cost average into these stocks here, right? So into these high quality companies at better prices, and we're going to have more time to DC into, build out our positions before we see that rampant rotation back into these companies. And so until then, it's all good. For me, it's great because I get to buy some very good companies, and the shopping list will get updated soon. Next week, we're also going to be including the ETF shopping list. So there's 52 ETFs based on different objectives like growth, value, dividend, different themes, whether it's AI, cybersecurity, whether that's semiconductors, whatever theme, whatever objective you're looking to achieve, there's going to be an ETF for that in that ETF shopping list. So not only am I going to be releasing the stock shopping list, but also the ETF shopping list as well. And I think both of them are going to be super useful in your portfolio construction. And we can have a very good discussion in our Discord as well for those ideas. Okay. Yeah, good morning, Caddy. Question. You mentioned in a recent video that you bought more Palantir with the valuation be so high and far from the $80, $85 fair value. What made you decide to buy more? So for me, I bought it in the options portfolio. So for me, the plan is to buy more so I can run the wheel strategy and I can actually sell more calls. Yes, $80, $85 is indeed the fair value. And I will most likely be picking up a lot more at those levels. So, $79, $80 is 40% away from where Palantir is. So it's not a long-term investment that I picked up those shares. They're primarily from a tradable and options perspective, where I've got a support down here, 125, 126, picked up another 25 shares. And the plan is to pick up another 25 shares if you do see 120s, 125, 130 again for Palantir. So kind of round up my position at 100 shares and then start selling calls, given how oversold it is and the fact that it's already down over 35, 40% from all-time highs. So yes, the fair value from a long-term perspective is still going to be at close to $80, and I will be planning to buy more, maybe a couple hundred shares more if it does drop down to those levels to pick up more shares, and of course dollar cost average more aggressively at those levels. So that would be the goal right now, is just to sell covered calls because the premiums are good and I want to take advantage of this oversold move here from Palantir. Okay, could you please let me know what's included in your Money Invest Community Plus option scores? Will we get sell options as part of the membership? Yes, so that is already included in the subscription, and also there's going to be a whole curriculum for options trading as well. So you start all the way from the beginning, options basics 101, pretty much teaches you everything step by step on how to set the foundation for trading options, what options are, what's an obligation, what's a right, what does it mean to buy a call, sell a call, buy a put, sell a put, all those different things, different strategies. So there's about 6 or 7 strategies I go over: cash secured puts, covered calls. Then we go over the Greeks. We also go over leaps. We go over, insurance, basically, callers, zero cost callers, straddles. We go over iron condors, credit spreads, poor man covered calls, risk management. Everything is discussed, as well as, of course, the access to the website, the trade alerts. Everything is going to be there. So yeah, that's the middle tier. This gives you access to the option scores as well as the alerts and the MoneyVest website as well. I have an open position of Palantir. It goes down to near 100. That's great. I think that's a good price point as well. Joby, I know there's been a lot of discussion for Joby Aviation here, and right now still selling off, even though it was a green day yesterday. Intraday, there was a lot of selling pressure, so it was red candle on a green day, suggestive that there was pressure to the downside intraday, and support level right now is going to stay put at 930. So 930, 940 is going to be that support right about there, all the way down to inside this green rectangle at around $7.90 to $8 per share for Joby. So that's going to be that support resistance all the way up to as much as $12.67, $12.70 for Joby as well. So again, a lot of consolidation sideways, then it broke down, and right now it's kind of trading down to those levels. Mike, thank you so much for that review. The education is top notch. Plus you get the brain trust from the community for help putting the education into practice. You won't be sorry. Thank you so much for that review. I really appreciate that. And yes, I think at the end of the day, like really what brings unique value is not just the educational material and the MoneyVest website and the tools and the trade alerts, but also the community engagement, because your net worth is your network, right? So the more you surround yourself with people who are like-minded, who are focused on the future, building your portfolio, helping each other, talking about different ideas, that is where most value creation happens, because you're able to engage with other investors that are also focused on the same mission as you. And that's really important, because sometimes, it becomes difficult to talk about this, with your friends or your family who don't have the same vision, or really are not interested in these things, and sometimes the conversations can be more bland and boring. But this right here is a community where we're living and breathing investing, money, finance, trading, and so it becomes a bit more open discussion because everyone's talking about it anyway. So that's what I love about it, because every time you go on the chat, there's going to be hundreds of messages to catch up to, and always conversations around how to invest better, what opportunities are we looking at, and how to trade, and what different companies are we looking at today. So is opening a new position in Netflix now a good call? So I think Netflix, is still oversold. I mean, it has pushed up quite a bit. We talked about it in the low 80s, mid 70s. Those were, of course, the better prices. It's already moved up over 22%. I wouldn't necessarily say that it's too late, but depends on what your goal is. If you're looking at trading it, I think you've kind of missed that entry. But if you're looking at planning on picking up more shares or buying for the long term, want to keep it for at least a few years out, I think Netflix still trades at a pretty good value, given that it's in the 90s, given the future earnings as well, right? So if you come over to the platform, and then if you go over to Netflix here somewhere, so right here, it's still in a bear market, down quite a bit from all-time highs. So fundamental analysis, analyst estimates, and we're looking at the EPS for 2026 at $3.13 on average, which puts us at a forward PE of 27. You add another 10% of 27 is going to be another 2.7. So let's round it up to 30. 30 forward times earnings for a company that's growing at 24%. Yes, the PEG ratio is going to be a little bit over 1, but it's not the end of the world. I think it's still trading at a pretty reasonable, PEG ratio and a forward P multiple, accounting for the pre-market move as well. And then you've got a low target. So there's about 45 analyst ratings and 31 buy ratings. We got 13 hold, and we got the overall consensus as buy. And then if you come over to the buy targets, you've got a low target of about $95, which still represents about, not after today's pre-market move, only 2 to 3% upside, because prior to this it was 12%. Average is 117, so that's 38%, much lower because pre-market were much higher. And then median is 113 with a high target of 152. So those percentage upside will get updated because pre-market we are indeed moving higher, about 9%. So again, tradable, I think kind of missed entry, but from a fundamental perspective, long term, I think still trades at a pretty decent price point in the low to mid 90s here. Okay, why did Nvidia fall after good earnings? You know, I don't know what to tell you. I think it's going to be anybody's guess. My guess is going to be just as good as yours. I mean, that's the market in general. Like if I were to define the market in a nutshell, that is what I would, you know, direct your focus to, is that companies can come out with the most amazing, spectacular, incredible 10 out of 10 out of this world earnings, and the stock can still drop over 5.5%. And for a company like Nvidia, it's not a small move. I mean, $4.5 trillion business, 10% is 450 billion. 5% is 225 billion, right? So we're still seeing over about a $250 billion loss in market cap over some of the best earnings we've ever seen. And that is what makes the market so special and so unpredictable at the same time. Because had I told you earnings wise, this is exactly what the earnings are going to look like. Double beat, guidance raise. I mean, overall, just phenomenal numbers, record data center revenue, record automotive revenue, record gaming revenue. Everything was going to be just fantastic. You would have not guessed the stock price to be down 5.5% after earnings, right? Nobody would have, because that's how markets work. When expectations are so high, and even if the company meets or slightly beats expectations, it's still not enough, right? It's still never going to be enough. And but that's good. I mean, long term, it kind of is a good thing, because you're getting fundamentals improving, price going down, opportunity. Represent opportunity. I'm looking for another trade on SOXL. Like, being very honest, like I want SOXL to drop like 40-50%. I would love for this thing to be trading in the low to mid 30s. I would love it if SOXL was trading down to those levels, because I would be just plowing every dollar into SMH or SOXL for those leverage trades. I really do want one very good massive dump on semiconductors. Like, I would love that. I know nobody wants to hear that. I know people would probably not want to hear a sell-off, but guys, we can load up the boat on semiconductors if we get another very strong dip. I mean, Broadcom, AMD, like all these are great companies that have been down like a little bit. I mean, Broadcom's down 23%. AMD from all-time highs is down another 24%, and Nvidia is down like 15, maybe 10 to 15%. But a bigger sell-off would be amazing. None are hitting fair value. Well, some of them are, some of them will take time, but that's why we have the fair values, right? That's why we don't chase on the way up and we look for better prices. Do you have some speculative stocks that you're waiting for? No, not really. I mean, I keep my speculation as far as BITX. That's it. But I don't look at penny stocks. I don't look at small caps. I don't look at speculative stocks in general. Because for me, speculation is not a consistently winning strategy. For us, it's important to have calculated risks, and for us to understand the thesis behind why we're investing, why we're actually buying something, because every dollar needs to be invested well. So nothing for me is going to be a speculation in general. At least going to have some kind of analysis behind it. Nvidia goes how much down and what chances on up, and should we buy or not? So Nvidia, I think much better support and a level is going to be down here in the 170s. I will be doing an Nvidia specific analysis very soon. And so we'll talk about that in more detail. And then of course the fair value will get updated. The buy targets will get updated on the shopping list. But I think this support level down in the 170 is going to be much better for Nvidia. Okay, perfect. Thank you for explaining what we get in the middle tier. Great. Need confirmation on CoreVive hitting support at 185, DCAing thoughts anyone. So let's take a look at CoreVive here, which has also been under tremendous pressure inside this downtrending channel, lower highs and lower lows. And this is the area of support. So yes, it is an area of support here inside this green rectangle. That's going to be sitting roughly around $86, $87. But just be a little bit more careful because it's gapping down heavily on earnings. And if the sell-off continues, the next support is going to be down in the low 70s, right? Low 70s is going to be that next support in case we get that sell-off further. But we also do have a little bit of a gap to fill in, and the lower high coming in all the way up to $97, $98 as a resistance. So yeah, so support level is going to stay put at $84, $85 for CoreVive. Yes, tech dump and load up, 100%. I really want that. What's your speculation on BITX? I mean, it's more geared towards Bitcoin, right? I mean, that's really what it is, because Bitcoin, from a fundamental perspective, if I were to look at it from an investment standpoint, Bitcoin has no intrinsic value, at least none that I can calculate. You know, I cannot convincingly tell you that, okay, Bitcoin should be valued at XYZ price. Why? Because it has no cash flow, it has no future earnings, it has nothing that we can model into our spreadsheet to better understand where it should be trading, right? What's the fair value? Bitcoin is probably one of the best asset examples that we can give you from a demand and supply standpoint and from a speculation standpoint, because at the end of the day, like, the price of Bitcoin is going to be dictated by buyers and sellers that are willing to pay for it at any given point in time. And that depends very much on sentiment, on hype or fear. So that's really what's driving Bitcoin's price. And BITX inherently becomes a derivative of Bitcoin, which at the end of the day becomes more speculation than anything else, because there's no way for me to actually evaluate, what the fair value is going to look like. And so, yeah, so that's going to be for BITX. Would I buy Duolingo? So DUOL. Let's take a look here. So it's been selling off aggressively, broke down from this head and shoulders, which we have discussed on the live stream before. So overall, I think the revenues are growing. Profitability is also getting better. So that's good. In terms of balance sheet is also phenomenal. We're looking at $1.9 billion of assets versus liabilities of $578 million. Net debt negative $1 billion here. And then if you come over to stats, trading at a pretty cheap valuation, 14 times earnings, a little bit over 5 times sales, and earnings expected to also contract in 2026. Might have been a one-time event for Duolingo in 2025. So $3.49 and then accelerate up to as much as $5. So yes, I think Duolingo does represent some pretty decent value here, especially the fact that it's down 27% pre-market right now. Wow. Incredible amounts of sell-off here on earnings. And the next support is pretty much going to be down to as much as $60 for Duolingo. So that is essentially the all-time low for Duolingo, and that's where it kind of settled in back in 2022's bear market before ripping to all-time highs of 540. So that was over a 750% gain before getting crushed 84% again. So very, very volatile company. But again, if you've got packaged software, from what I know, Duolingo helps you with like learning new languages, I think, and translation services, which is like going to be widely disrupted with AI. Like, language learning website and mobile application, which engages in development of free language learning website and crowdsourced text translation platform. It doesn't have a defensible moat. I mean, anybody can learn with AI, like, new languages and do translations and stuff. And that's why, it's going to get hurt more and more with AI. So, we have to also look at defensible moats, for any company. As I've said before, you've got one thing as market, right? So everything's like a very good learning lesson, right? So all your failures, all your mistakes are always learning lessons. One of the lessons I learned from InMode is it's a phenomenal company, right? So it's got a moat. It's got great management, but it's not a large enough market. And that's why this company did not perform and it failed. It's got the best balance sheet, right? If you look at the balance sheet, they've got plenty of cash. They are profitable, right? So everything that you would look at quantifiable, this company is doing, right? It's got phenomenal balance sheet. Look at the valuation. It's under 10 times earnings, 2.4 times sales, and earnings are also, somewhat stable. Why? Because of the small market, the niche market that it trades in. So you could have a great management and a very defensible moat competitive advantage, but if you're operating in a very small market, you still don't win. But if you've got a fantastic large market, right, and you've got good management, but you don't have moat, right, such as Duolingo. Duolingo was a very, very big market, right? Management, I haven't studied yet. I can definitely look into that as well. But moat, right? Defensible moat, very important. You need your competitive edge to be protected. Great example, of course, is Nvidia. Nvidia has all three. Large market, great management, and a very defensible moat. Same thing can be said for Palantir. Large market, very good management, defensible moat. Same thing can be said for Tesla. Same thing can be said for many of the successful companies that are there that have all three. Because the market allows you to grow, the management allows you to execute, the moat allows you to stay relevant. All those three things are very important for any business to succeed long term. And if any one of those three things are missing, that's where cracks start to show up eventually. And so I think we can look at companies' failures as well and understand, what went wrong and kind of bucket them into one of those three things. Was it not a large enough market? Was the moat not good enough? Was the management wasn't good enough? And I think that is what the learning lessons we have to take away from all this. Okay, please comment on Nvidia. Nvidia is making a head and shoulders. Let's take a quick look here. So Nvidia right now, I mean, I don't really see like a clear head and shoulders right now. I mean, what I do see is a lot of consolidation. So this is nothing but a lot of, consolidation sideways is what we're seeing for Nvidia. So, it's been getting rejected here at 194, 195. So this has been a big resistance for Nvidia. So getting rejected consistently right over there. And then we've got a very strong support all the way down here. So, validating that 165, 170 as a support for Nvidia. So a lot of consolidation. So this is the range, within which it's been trading. So I don't think that's like a head and shoulders, but rather just an area of consolidation. So next support is going to be down at 170 again. Is it a good level to open a position on ServiceNow, S&P Global, and Intuit? Okay, lots of questions, lots of stocks there. Okay, ServiceNow, package software, another stock that's been absolutely crushed. I think Jensen Huang explicitly mentioned ServiceNow, kind of leveraging AI and using that platform as becoming more productive and more efficient. Yes, it's oversold. Yes, it's in a bit of a downtrend. Yes, the valuation has come down. It's down another 4% pre-market. And I would argue that I think from a starter perspective, like starting a position, I think it does make sense in the low 100s, sub 100, to actually look into the stock more deeply, even from a swing trade perspective, given how oversold this stock is on a weekly time frame, right? It's absolutely destroyed with the RSI over 22. Same thing I would say for Intuit as well, kind of making a deal with cloud and Anthropic, and then down another 3%, bouncing off of that support here at 350s. Again, very, very oversold, technically speaking. And so these are tradable opportunities for sure. Whether they are long-term winners has to be studied more deeply. Like, what is their AI, infrastructure looking like? What's the pathway moving forward? Like, how are they looking to leverage AI to be relevant, to stay actually have a moat and not actually go out of business or get replaced with AI? I think that needs to be studied, but from a tradable technical standpoint, I think both of them are looking pretty solid. S&P Global, you also asked. So S&P Global is also fundamentally a very strong company with very high profit margins. We're looking at 25-30%, but it's not a growth company. It's not like a stock that's actually growing revenue and earnings every year by over 20-30%. It's a bit more linear. You'd be looking at like sub 10% growth year over year. And that's one of the reasons why it's been consolidating sideways a little bit over the last several years, right? So resistance is going to be all the way up to 475. Again, oversold, support in the low 400s, bouncing off of that level. Next target all the way up to 470 for S&P Global there. PayPal, no moat. Yes, it used to have a pretty strong moat, but then I think it was taken away by Apple Pay, by a lot of companies just kind of entered into this fintech space. And so having your moat, defensible moat is very important, right? Because there's going to be competition. This is a concept that was very well articulated in the book, the little book that beats the market by Joel Greenblatt. And he talks about this in a lot of detail, that if there is a lot of margin, they will come. If there's a lot of money, they will come. And they as in competitors, other players, other entrants, they will come and they will drive down margins until we reach an equilibrium. Where margins will not be driven down is if you do have a very strong moat, that you're doing something only you can do, which leads to pricing power, which means that your pricing will not be changed. It will stay consistent because of the moat that you have. But if there's no pricing power, there's no moat, new entrants will come in and the margins will be driven down to a point where it reaches equilibrium. And so that's when different kinds of differentiation comes in. But that's why, more and more companies are going to be more interested in, chips, semiconductors. Like, it's a very, very profitable, high margin business. I mean, Nvidia is making cash, literally cash, hand over fist right now. Margins are very high, but that's both a good and a bad thing for Nvidia long term, is because if you're at the top of the mountain, it's very difficult to stay at the top of the mountain, and you have to keep reinventing the wheel, have to keep coming out with new things and keep innovating and keep making things better, faster, smaller, more efficient to stay at the very top. So that's the difficult part. What it will take to break 170 level for Nvidia, Iran war or AI bubble pop or anything else, or China taking Taiwan. So again, there's a lot of different reasons that could happen. I don't like to speculate on what could be the reason, but what I can tell you is that, of course, if it does break below 170, then we are most likely potentially heading down to 150s. I think 150 is going to be right there. Previous resistance, that was the ceiling back in 2024. We sold off before that, before breaking out in 2025, in the middle of 2025. So that old resistance became the new support in case Nvidia breaks below 170. But if it does break below 170, I think it's going to be trading down to a ridiculous valuation. I mean, if you come over to Nvidia here and then we take a look at 2026 earnings or 2027 fiscal year, so analyst estimates here, we're looking at 2027 fiscal year at $8.06, right? Even at current prices, Nvidia's valuation is at 23. That's at 190, right? So imagine what would happen if Nvidia was trading down to 150. It would be trading at 18 times earnings. Now you're telling me if this stock is trading at 18 times earnings for earnings expected to grow at over 64% year over year, you're telling me Wall Street's not going to be like drooling over this stock? Like they're not going to be like literally just going crazy over Nvidia at 150, So price matters a lot. In my opinion, I think with any investing that you do, whether it's stocks, real estate, doesn't matter. Price determines everything. The price you pay is what's going to dictate your future returns. You can have the best asset in the world, but if you overpay for it, forget about returns. And you can have the worst asset in the world, but if you underpay, if you pay the best price, the lowest price, a discounted price, a better deal, you can still come out ahead. Doesn't matter the asset quality. Again, I'm saying that in a very, very elementary way. Asset quality also does matter. So our job is to combine both, get great assets at better prices, not completely ignore asset quality. We want good assets at even better prices. So once you combine both, I think that is when the magic happens for investing long term. So yeah, so 170 is going to be a very strong support there for Nvidia. So coming back over to the market, Nvidia dropping another 2%, 180 is where we are at. Tesla here 1.2% lower. We got S&P and the NASDAQ. They're both down almost 1% on the day. Pre-market looks like February is indeed going to close down. It was supposed to be a red month for Valentine's, and it is going to be a red month, a month of deals and red hearts is what we're getting this month. A complete flush down for the market to close out the entire month. Phenomenal. Perfect. So yeah, I hope you all are ready. And Bitcoin here trading down to $66,000. We got Ethereum trading down almost 4%, a little bit down to 1950. Again, we did see a little bit of that spark in Bitcoin and Ether, some kind of risk on environment here on Wednesday before market rotated back down over the last couple of days here. And volatility is back higher. It's been elevated, right? The VIX has been elevated. We haven't seen the VIX this elevated in a long time, because if you go back, so if I were to do some very quick calculations here, we are looking at around 29 bars, right? So that's 42 days. 42, because we're on the daily chart, so 42 days since January of 2026, right? So 42 days, we've kind of averaged about above 20, which is a pretty big deal because we haven't stayed at these elevated levels for a much longer period. In the past, you'll notice that we come up to 20, 22, and then we get crushed back down. We basically literally one day 21, and then we crushed back down. Once again, things have happened in the past where we get up to those levels and get crushed back down. We haven't stayed at these levels for this long. And that definitely represents the market's uncertainty and this elevated fear in this market over AI and everything else that's obviously going on. So here we go. Markets are open. We are open for trading on the last day of February, which is most likely looking like it's going to close green unless we pull a miracle and the S&P 500 actually rallies over 1.5% intraday to close green on the month, which seems quite unlikely given the pre-market gap down. And the S&P is down 1.2% for the month of February. Thank you very much. So thank you so much for joining, everyone. Really appreciate it. And again, 2 more days left if you're interested in joining today and tomorrow. with that 40% annual discount, the shopping list updates coming out next week, along with the ETF shop list, as well as all the trade alerts on Discord, engaging with a lot of other members, educational videos, which is tons of them. There's a lot of tutorials, a lot of videos, spreadsheets, PDFs that you can download, a lot of timeless videos on how the MoneyVest Index works, my portfolio recaps, everything you can watch on the Patreon MoneyVest there. So again, link's going to be down below if you're interested in joining. Any questions, I'm more than happy to set up a Zoom call. Just email me at admin@moneyvest.com, and I'll see you all in the next video. Take care and have a great weekend.